Okay, good morning. Can everyone hear okay? I'm sure in this room the audio is working. New York, can we get a head nod if you can hear us from New York? Thank you. So we apologize for getting started a few minutes late. We have been told there's a bit of a traffic problem out on I-90, which is causing some folks delay, so we wanted to make sure to give enough time to let people fill in. So good morning, everyone. My name is Peggy Neville. I'm a Deputy Director here at the Office of Energy Efficiency and the Environment at the Department. I'd like to welcome all of you here in Albany, those attending in New York, as well as everyone who's viewing this through the webcast. I'd also like to thank Commissioner Diane Berman for her interest in attendance today. And I would like to kind of just get things started. I want to start with a little bit of kind of background to set the stage. In the Commission's December 19th, 2013 order establishing the New York Green Bank and providing initial capitalization, the Commission required NYSERDA to collaborate with department staff to design appropriate metrics, data collection, and reporting requirements that would support the Commission's ability to assess in the future New Yorkers' return on the investment in the Green Bank. The order also stated that NYSERDA and department staff should provide an opportunity for other parties to provide input into this process. That's the purpose of today's technical conference. NYSERDA is required to file these metrics by June 19th of this year. In preparation for today's technical conference, NYSERDA filed an agenda and proposed metrics through DMM in case 13M0412. We do have copies being made of this material, which will be up here for those attending in Albany on the front table if you need a copy. This material was also posted to the Commission website. Perfect timing, Ophelia. And the copies appear. Feel free to help yourself. This material was also posted to the Commission website. And following today's technical conference, we will also post the PowerPoint presentation that will be used, as well as a link to the webcast for future viewing of today's technical conference in its entirety. The format that we will use today will be to allow our Green Bank and NYSERDA staff to make a presentation on the material, and then we will open it up for questions and input from those here in Albany, as well as folks attending from New York City. We'd ask if you have questions or input to offer to please approach the microphone here in Albany, and there's microphones situated around the table down in New York. Please announce your name and the organization you represent, and be sure to turn the microphone on. The microphone will be helpful for those viewing through the webcast to be able to hear the audio. So with that, I'd like to introduce our speakers for today. We have Alfred Griffin, President of the New York Green Bank, Caroline Angorley, Chief Operating Officer of the New York Green Bank, and Patrick O'Shea, Director of Performance Management and Evaluation Systems at NYSERDA. All yours.
Thank you, Peggy, and good morning, ladies and gentlemen. Thank you for your interest in the New York Green Bank and the metrics that we will review today. So I will give a brief overview of the Green Bank and background and progress to date, and then Caroline and Patrick will take you through really the meat of the day, the metrics that we are proposing. So let's go to the next page, and then the next page. So the mission of the Green Bank is to accelerate clean energy deployment in New York State by working in partnership with the private sector to transform financing markets. As I think all of you know, this is an initiative that was announced by Governor Cuomo in January 2013 and being led by Richard Kaufman, who's the Chairman of Energy and Finance, as part of a broad set of energy programs. The key elements of our mission are to work in partnership with the private sector. We are looking to do things to help crowd in the private sector, not crowd out the private sector. We are looking to find those financing gaps for economically viable projects and assets in the state of New York that are preventing the acceleration of deployment in the state of New York. And in what we're doing, we're hoping to transform financing markets, with the ultimate goal of the private sector taking hold and taking our place in whatever we're involved with, so that we can step away and move to the next areas that need our support. We we are looking, obviously to, as I've said, to deploy more projects in the state, and the ultimate goal being to have a greener and cleaner economy with more reliable and ultimately more cost-effective and more energy choices. Next slide. We are open for business. We are seeking transaction proposals currently from the private sector, and there are three basic criteria that those proposals have to meet. One is, the first is really a credit criteria, that portfolio revenues exceed portfolio losses, and I'm sure everybody in the room is glad to hear that. We need to be paid appropriately for the risk we take, and we need to be taking smart risk. We are, here for the deployment of proven technologies. We're not providing operating capital. We're not providing development capital. We're not providing venture capital. We're here to provide financing for the deployment of assets for proven technologies. The second criteria is there needs to be the expectation that what we're doing will help transform financing markets. The first question there is, do we need to be involved, and why? We need to understand that if a market's being efficiently served by the private sector, that's probably not where we need to be involved. So if the answer is yes, there is a financing gap that we can help meet, the next question is, well, what is the role that we're playing going to do to help transform the markets? There needs to be an end game. We need to have a game plan and a roadmap as to what we expect to happen in the market after our involvement, such that we will no longer need to be involved at some point in the future. So that could be in terms of greater scale, it could be in terms of more history, greater market understanding, more standardization, but all these are things that we'll be thinking about prior to entering into a transaction, because we want to be focused on those areas where we think that ultimately we can step away when certain things happen. And if it's an area that it looks like we would need to into perpetuity support, we probably should be focusing on other things rather than those types of transactions. And then the third criteria is we need to have an understanding as to what the energy savings are, what the clean energy generation will be, such that we will have a positive impact on greenhouse gases, which is a lot about what the metrics are all about. Next slide. We will be looking for underserved transaction types. As said, our tools will be various forms of credit enhancement. That can be guarantees, letters of credit, reserve accounts. It can be subordinated capital. It can be senior capital. It can be warehouse financing, where there is an aggregation plan that in order to aggregate distributed transactions of smaller scale, that if we can aggregate a pool, that the private sector will then engage in that pool. We think that's a role we'll likely play, and we're open to other ideas from private sector participants as to how we can assist. These are just some examples. We'll be working in collaboration with private entities. Again, the whole idea being that we're looking to crowd in, not crowd out. But anything we do, we need to have private market participants, including financial participants. We're not looking to be involved in transactions where there's not currently a private financing participant that we're helping bring in, or or otherwise we need to have identified who is going to be likely stepping into our shoes once we deliver certain scale, etc. And we need to have an appropriate cost and revenue structure such that we are covering any losses we have and covering our expenses. Next slide. So what will we do and what will we not do? And this is, again, keeping in mind that that we are looking to focus on those transactions that with greater scale and experience can ultimately be financed in the private sector. So what will we do? We'll be looking to support development of liquidity in the markets. We will be creative in supporting creditworthy transactions in the various ways that I previously mentioned. We'll be working to develop and incubate new structures so that there's a roadmap for the private sector, such that it's not such a heavy lift when we ask them to get involved in things. And we'll be supporting and promoting standardization wherever we can, because that's such an important component of fragmented and distributed markets. And we will be promoting the collection of data, because at the end of the day, having good data and good history around that data will be key in getting the private sector comfortable with the underlying risks. What will we not do? We'll not support transactions without private capital involvement. We will not accept credit or project risks that we think would ultimately always be unacceptable to the private sector. So we're not looking to be the party that takes on risk that we think the private sector would always be unwilling to take on. We're looking to take on those risks that we think the private sector will take on once they see greater scale and there's a bit of a roadmap. So we will be looking towards, in any situation, they may not be direct comparables as how the private market took on a certain risk, but at least indirect comparables that the private market has indeed taken on this type of risk. It may not be as relates to energy efficiency or as relates to generation, but if there's a certain counterparty credit risk underlying a transaction, where in the markets have we seen the private market take on that risk previously? Whether it's consumer risk or commercial real estate risk or middle market risk or investment grade risk, we need to have a true belief that there's likely an end game there where the private market steps into our shoes. Part of that being that we'll not take on technology risks that are not proven. So we're not the party. It's not our mandate to help incubate and commercially prove out technology risks. There are other parts of NYSERDA that provide programs around R&D, and we have John Rhodes and team here that a lot of programs that support that, but that's not the mandate of the Green Bank. We're here for proven technologies and deployment of those projects. We'll not be offering direct subsidies. That's not the mandate of the Green Bank. Now, NYSERDA, more broadly, will still be supporting subsidy programs, but that's not the mandate of the Green Bank. We need to earn an appropriate return on our capital and not be subsidy-based, and will not be pursuing one-off transactions without the ability to replicate. We need to be focused on those areas where we think there is the potential for a lot of deployment and where our involvement can have a big impact. So we're pretty flexible as to size and the types of transactions we would be involved with, even on the smaller side of things, but we would need to be convinced that there's a lot of potential scale, a lot of replicability there, such that we can have a substantial impact. Next slide. So our progress to date. So as mentioned, the initiative was announced in January 2013 as a $1 billion initiative for an investment fund to service this market. In mid-2013, NYSERDA engaged Booz & Company to do a market feasibility study, and via that work and other work done by NYSERDA, a petition was filed with the PSC, and an order was granted in December for our initial capitalization, which is made up in part of RGGI funds and the majority ratepayer funds. We, in February, formally opened for business. We launched our website, and we issued an RFP. And in our RFP, it's an evergreen RFP. There's no deadline. It's just making clear to the market what it is we're looking to do and the types of proposals we seek from the private market and how we will be evaluating those proposals and scoring those proposals. We've established our organizational structure. We've made number of key senior hires, including Caroline and Nick Whitcomb, who's in the New York DPS offices currently, and a number of other important hires. We are open for business and operating. We have a tremendous amount of support from our colleagues at NYSERDA, ranging from working with John and Jeff Pitkin and others on strategy. We have Kate Muller here. Communications, the marketing communications team has been tremendously helpful. Legal, Peter Keene and others. Information technology, so forth and so on. We would. NYSERDA has played an important role in our being able to operate at the level we're operating at currently, and we are expecting to file our initial business plan as according to our order by June 19th, and we have put our risk frameworks and internal committees together and so forth, such that we can appropriately review and vet transactions as they come in. We've been very active in our outreach with the private sector. We're encouraged by the responses we're receiving. We are happy to say that although we're not, we're here to be responsive and not prescriptive in what people are working on. We're happy to say that we're seeing a lot of diversity among technology types, sort of anything you could think about, whether it's solar or battery storage or wind or anaerobic digestion, waste to energy, all sorts of energy efficiency. We're seeing a lot of diversity among customer type, whether it's consumer, residential, commercial, mush, industrial, commercial real estate, etc. And we're seeing a lot of diversity around proposals involving deployment in various geographies within the state of New York. I think probably I can't sit here and say that every corner has been covered, but a lot of corners are being covered by the types of proposals that we are receiving. So with that, I'll turn it over to Caroline Angerly, our Chief Operating Officer.
I feel like talking after Bill de Blasio. I've got to bring it down. Thanks, Alfred. This part of the meeting, we want to bring people through the proposed metrics that we have. They cover three main areas. That's risk management, financial metrics, and also energy and environmental. I will speak to risk and financial. Patrick O'Shea will speak to the energy and environmental, and then we'll open it up to questions. But just before we dive straight into the metrics, and you all will have seen this table before, this is part of the materials that we posted prior to this meeting. Just to tell you a little bit about what we were thinking about when we were proposing our metrics reporting and evaluation plan. So as we're putting together the whole program, we want to take into account a number of things, just to run through those so that you know what we were thinking about when we pulled this proposal together. One, and first and foremost, the needs of the stakeholders. Secondly, the very particular mandate of the New York Green Bank, which Alfred has already alluded to. The objectives in particular in New York State that we're trying to address. We thought about the large variety of counterparties that we're going to be planned to be dealing with on the private sector side. This is going to cover a whole spectrum from large private companies to large public companies to large private companies also, and to small private companies. So there's a whole range of counterparties who are going to have different needs, different experience, different expectations. There are our own goals, obviously, consistent with our mandate, and the experience of our growing staff in these target markets as to what is usual and customary business practice. We looked at what do comparable private sector institutions do, both on the specialty finance side and on the investment fund side. We thought about what do comparable public and public-private partnership institutions do for their metrics and what do they report. And overall, what in the markets that we're going to be operating in is usual and customary business practice. So with that, we came up with the set of key indicators that you've seen to identify across the business things that are going to provide for you a comprehensive view of our growth and our performance as we go forward. the first table there is risk management, but one table that doesn't appear on the slides is what we call milestones. So it's not metrics per se, it's milestones which we talked about as operational and risk management milestones. These are in the metrics plan because we wanted to be upfront and say, here are all the things that you're going to know and that we're going to be communicating to you about. And on the milestones, these are of a nature where both through the order and just through general practice, there are certain things that we're going to be telling the PSC and we're going to be telling the public. And it relates to many of the things that Alfred already talked about. It's our organizational milestones that we're hitting, it's staffing up, it's forming the committees, it's getting risk management in place. And these things are not periodically reported to you, but they appear in the milestones table to let you know that when we have completed these things one way or another, whether it's through Alfred's certification to the PSC or other means, we will be letting all our stakeholders know. So then turning to what we're doing on a periodic basis, falling into two buckets. One are operational and risk milestones, and the periodic ones are divided into risk management, financial, market, and energy and environmental. So turning to risk management, what is it that we're going to be telling you and how often are we going to be telling you these things? On a quarterly basis, we're going to be telling you three main things. We're going to be telling you how much capital we have at that time, the total of our committed funds, and committed funds are where we have signed an agreement for a particular transaction and we've set the money aside, but we have not yet disbursed it. But we know that according to the conditions of the agreement, once they're fulfilled, that money will be disbursed. So committed funds gets set aside. And then we'll tell you the total of deployed funds. And deployed funds, as distinct from committed funds, are we've signed an agreement and money has actually gone out the door to work in an investment that the Green Bank has made. So those three things we will tell you every quarter. On an annual basis, and from a risk management perspective, this is very important, you're also going to know what we call our overall portfolio impairment. And impairment basically means that an asset, an investment, has become non-performing. Folks are not paying their interest, people are due to pay principal back, they've not done that. And so we're obviously going to track that, and hopefully that is going to be a non-existent to very small proportion of our overall portfolio. But this is going to be a key metric by which we, running the business, are going to be able to tell how we're doing in picking our investments and making our investments and monitoring our investments. And all of our stakeholders are equally going to be able to see what percentage in terms of impairment, so of the dollars that we have put to work in Green Bank investments, what proportion of those fall within this very specific definition of impaired. And it's a financial definition. And that is something that gets reported on annually because a lot of the metrics that actually go into and the calculations that go into coming up with impairment are tied to the processes that go on in your annual audited financial preparation. So that is something that gets reported annually. Going to the next slide. Excuse me. Financial metrics, you're going to see a number of very important things on an annual basis. You're going to have audited financials. And audited financials here is, implies, of course, an independent firm of accountants. These are people who have, they're not in the Green Bank employ, they're not consultants to Green Bank, they are truly independent. They look at our audited financials in the same way that they look at NYSERDA or any other agency's audited financials. And so what gets posted there is a series of financial statements. It's balance sheet, its income statement, its cash flow, but also importantly, it's other, critical information. It's the notes to the financial statements, and it's something called MD&A, so Management's Discussion and Analysis. So those financial statements are going to be an annual window of great importance for all of us to see how Green Bank is doing and how the balance sheet is stacking up. Next, we'll report on the mobilization ratio. And the mobilization ratio, I guess, makes us a little bit different from what you would perhaps see in a private sector fund, investment fund of a similar nature. And that ties back to our very particular and special mandate at the Green Bank. And that is that we're here to mobilize private capital. We're here to walk hand in hand with private capital to get them to invest in clean energy markets in New York State that they are not currently able to do for whatever reason, given market barriers. And so the mobilization ratio we're going to report annually is that for every dollar of New York Bank funding that is committed or deployed, how many dollars of private sector funding have we mobilized? And that's going to be an important indicator as to how we're doing, measuring up against delivering on our mandate. Pure financial, we're then going to talk about our return on investment. And this is sort of, classic for everybody. And I think it's really the key metric that everybody understands how we're really doing here. Is this an entity that is able to generate enough cash to pay its operating costs, to meet whatever, inevitable losses and loss reserves are necessary in the business, and be able to preserve and grow its capital base? So return on investment is something that we're going to be reporting annually. We're going to report it in a couple of ways. We're going to report gross return on investment, which is just basically income and capital as a proportion of income as a proportion of capital. And then we're going to report it in a way that we take into account our operating expenses. So that's going to be the net ROI. So you're going to see, every which way is the Green Bank able to, as we say in Australia, wash its own face? Are we pulling our own weight, and we're covering our own costs, and we're finding a way to grow our capital base? And then the final metric we report on annually is capital deployment, redeployment cycle time. And again, this is something that's very particular to the New York Green Bank and our mandate. And that is, this particular initiative is designed to make the most of ratepayer funds. And it's designed to make the most of ratepayer funds in that once they're out the door in an investment, that's not it. Not only are they generating interest and fees, they are also going to be repaid at some point, at which time that money gets redeployed. And so we will have a metric that we'll report on annually that will give an indication to what is that recycle time like? How fast is that? How long does it take for $1 of Green Bank funds to go into an investment, earn some fees and interest, come back out of the investment, and then be available for redeployment in new investments, so that we can keep spreading the frontier and achieve the Green Bank objective of expanding the clean energy financing markets in New York State for the benefit of all New Yorkers.
So, just put this back up. So, market metrics. So each transaction that the Green Bank enters into will have a clearly articulated statement about market and barriers in the market that are sought to be addressed by Green Bank activity. And what we'll be doing through an evaluation function is looking to establish a baseline and then longitudinally over long periods of time measure progress in terms of the level of awareness and knowledge and the confidence of financial community to make these investments, and not just the financial institutions themselves, but also the intermediaries. So this will be an effort where we may not expect to see a change for 2 or 3 years. So this will not be part of short-term reporting, and we'll be using third parties to do that. I'm going to go to the next one. In the energy and environmental metrics, the challenge we face is to not require our financial and intermediary partners to become energy program experts. And so in addition to the market expectations with each transaction, we will clearly articulate the information that's available from which we can build an estimation of the energy and greenhouse gas benefits of those transactions. And then we will estimate them in the short term and then verify them through independent third-party impact evaluation in the long term. The metrics themselves don't differ greatly from the current NYSERDA incentive programs. The only real difference in focus is on that we will focus on lifetime energy investment. The investment has a lifetime view. We'll look at the total expected energy and environmental benefit of that investment. But in terms of the metrics themselves, if you're familiar with any of our programs, these follow the same metrics that we use for these technologies. The bank will not be investing in technologies where we don't have hundreds to tens of thousands of projects, where we've invested directly in the projects, have detailed information about the projects, the equipment, the facilities, and can make reasonable estimates of the expected benefits. And I'll go on to the evaluation plan. So what we end up with is working a couple of arm's length distant from the projects themselves. This approach makes us rely really on this independent third-party evaluation to really true up and make sure that the results are being achieved. And that's our high-level goals are around that. And if you're not familiar with impact evaluation, what we intend to do is go out and sample actual projects, look at what's actually been done, make sure that our estimations are trued up, and that would be an independent third party. The approach will be based off this transaction profile that we talk about, where we will have clearly stated objectives, independent evaluation, and third-party assessments. We go on to the next one. Fine. All right. So what you'll begin seeing. So quarterly reports. So starting at the end of this year, you'll see quarterly reports filed 45 days after the end of the quarter. Most of the information in the quarterly reports will come from the financial metrics. We will begin to make estimates of the energy and environmental metrics. One of the things you have to remember is the financial activity will precede the installation of the equipment, and so there'll be some lag as money moves through the system and we begin to report the energy benefits. But this is what you'll see in our quarterly reports, and you can go on to the next one. And then in the annual reports, which we'll be filing yearly, you'll see some of these same metrics plus an audited statement that these will be audited results. So the quarterly reports will be informational and accurate, but the annual reports will be audited, and those are mostly focused on the financial metrics as well. In terms of the long-term outcomes of the New York Green Bank and its impact on the market, we will do periodic market evaluation. I expect that, as I said, that you'll see the first wave of that 2 or 3 years out in terms of looking at the activity, and then periodically on a cycle that makes sense. And we will, as I had mentioned earlier, we will be producing metrics that are very similar to what you would see in a renewable energy program, in a CHP, combined heat and power program, or an energy efficiency program. And we'll be able to relate those worlds pretty well. We'll also, let's see, no, I think I'm done. And with that, I'll wrap.
Great, thank you for the presentations. We're going to flip over on the video here so that we can see our colleagues down in New York City at the department's office down there. So this portion of today's technical conference is really open now for the parties who are here in attendance to ask questions of the speakers, as well as offer any input based on what you've heard today and the material that you received in advance of the meeting. So I will start with here in Albany and ask folks if you have an interest in a question or providing input to approach the mic here and introduce yourself. Please be sure to turn the microphone on so that the audio can be heard through the webcast. And then we'll turn it over to New York City.
Good morning. Looks like I get to lead the rush to the microphone. My name is Jay Goodman. I'm here on behalf of the City of New York. I have just a couple questions. One, I believe at the beginning you mentioned some, or described kind of generally some interest you've had so far with respect to the RFP that's outstanding. Can you tell me if there has been any activity to date with respect to transactions closed or pending, or when that's anticipated?
Jay, thank you for the question. We've not closed any transactions. We've just opened for business starting in February. But we have received a number of formal proposals and quite a few informal discussions where we know proposals are on their way.
Okay, and I think in the materials were provided that said that there was a target date of June or July, the summer of this year, to close the first transaction. Do you think you're on track for that? Just get a sense of
we are hopeful. We certainly have some transactions we will be working on during that period. Closing a transaction obviously involves a lot of factors to meet a deadline, but we have set a goal for ourselves to try to get something done in June or July, and we'll be working to bring things to closure as quickly as possible. But that is just an estimate, and we'll be working towards that as best we can.
Okay, thank you. And I have one or two other follow-ups, if I may, without holding one up. Great. Couple specific questions on the metrics. In terms of capital gains and losses, will that be reported as part of the metrics, or will it be presented somewhere else?
At the moment, capital gains and losses are going to show up in the math for return on investment.
Okay. And on the market metrics, when you talk about measuring the level of awareness, knowledge, and confidence, can you just describe how you actually evaluate that or measure that?
So we would basically hire third-party experts to go in, do interviews with key players in the markets, and develop a profile of that. We'd also look at activity, to give it some basis in reality. We would then look at the changes in perception and changes in activity at a point in the future. But it's really done through surveying focus groups with key players.
Thank you. I don't think I have anything else right now, but perhaps in response to other questions, I'll be back up here. Thank you.
Yes, Valerie Strauss with the Association for Energy Affordability. I just want to make two comments. I'm not sure they're questions, but perhaps you have a response. And they're really based on the fact that while you are a green bank, it is a public enterprise using public funding from ratepayers, at least initially. And I know there was a discussion of the cycle, the redeployment cycle of capital, and I guess my concern is that in some respects what I think the bank is trying to accomplish in certain areas is to jumpstart projects that do have long payback times, which is why perhaps private capital isn't there. So I'm just concerned that we don't have a short-sighted view of what this can accomplish over the longer term. If you have any thoughts on that?
Absolutely. I mean, we've thought long and hard about this too, and it's a great question. The premise of the Green Bank, and I think what is being validated for us as we are, continuing to speak to market players in the private sector, is that there are certain areas that they are not playing in and investing in currently. And even if those projects in and of themselves have a 10, 15, 20, 25-year life, the reality of what the Green Bank is going to do is step into a gap, not for 25 years, but step into a gap for some number of years, 3 years, 5 years, it depends on what the particular product is, so that we're being the bridge, so that in that 3 to 5 year period, we're broadening the frontier, and suddenly many more private sector players are coming to play in that area, and then the assets that we have on our books will be much more attractive as an asset class, because we're effectively reshaping clean energy financing markets in New York State, making certain asset classes more attractive, giving them greater liquidity, and our anticipation is that over some number of years, these assets get purchased by incumbents.
Okay, thank you. The other comment I have is, as I think many of us in the room are very well aware, equity has been an issue in the clean energy funds in New York State for the last few years, both in terms of geographic equity as well as rate classes, if you have industrial versus residential, and also considering low and moderate income consumers and making sure that they get their fair share, shall we say, of the clean energy fund that are projects that are funded. So I didn't see, I know you mentioned there were projects from across the state, but I didn't see any discussion of some of those equity issues, and I don't know that they're appropriate for a metric per se, but I think it's certainly something that should be considered and reported on. Thoughts on that?
Thank you for the comment.
Do we have any other questions here in Albany? If not, we'll turn it over to our colleagues down in New York City. John, are there any questions down in New York?
Sims from NRDC. Doug Sims from NRDC. Thanks for the great presentation. That's a couple of questions on some of the metrics. One is on the mobilization metric. Does that metric take into account the additionality of projects the Green Bank made happen, which wouldn't have happened otherwise, or is that captured in the number and type of projects? I mean, how do we know what the impact will be in terms of additionality?
Yeah, Doug, thank you. There is no separate additionality metric. Additionality, however, is an important part of New York Green Bank's strategy, and every investment that we consider making has to meet certain criteria, the 3 investment criteria that Alfred outlined earlier, but also a number of other things, one of which is additionality. And that goes to this issue that we're looking to crowd in, not crowd out. We're looking to make things happen that would not otherwise happen without Green Bank participation. In terms of how we track that, you're right, it doesn't directly show up in the mobilization ratio, which is just really, New York Green Bank money mobilizing private sector money. It will show up, though, and you'll see it in the nature of the projects that we do. Our overall portfolio, as it grows, we will be reporting on, what the constituents of that are. You'll see the distribution, and you'll see that the type of projects, I'm confident, will be things that aren't getting done in the marketplace now. And sorry, yeah.
When we do our market metrics, some of the things that we will be looking at, in addition to the transformation of the market, are the impacts of the Green Bank that are additional and beyond the Green Bank itself. So we will have some of that information coming out of the market metrics.
Is there going to be a measurement of the combined impact of Green Bank activities with other NYSERDA investments? Will you be working alongside NYSERDA, or is it going to be completely separate transactions?
So there will be activities of the Green Bank that are independent, and there will be activities of the Green Bank where there is overlap. In the case that there's overlap, we have lots of information on the programmatic side. We would intend to use that to look at how the 2 entities work together. In terms of the bigger view, part of our evaluation will be to look at the relative way that the 2 initiatives play in the market together, and that'll come out of long-term analysis, the impact evaluation.
So in the last question, similar to the equity issue, this is actually not similar in that it has been tracked and the benefits are known. But have you thought about tracking the health impacts of the Green Bank's investments over time around the state? Avoided criteria pollutants, for example.
Yeah, we've had a lot of discussions internally, the Green Bank, and with our colleagues, obviously, at NYSERDA about how we would do this. And certainly, I think remembering that New York Green Bank is like one part of a very comprehensive energy strategy for New York State. And so there are various different components and programs that are looking at increasing clean energy, increasing health benefits, jobs, and all of these sort of fourth and fifth and sixth order effects. As we've tried to put together the metrics, bearing in mind the very specific mandate that the Green Bank has, and the people and the organizations with whom Green Bank will be interacting, there are certain things that we can get information about and that we can know for sure, and that's the basis upon which we want to be accountable and report to you all as stakeholders. There are these, later order benefits which I think we all assume will come, but it's very hard to draw the straight line and say this dollar of New York Green Bank investment created this decrement in health ill effects. And so we agree with you, but it's not something I think that from a real metrics point of view, Green Bank can easily track and meaningfully report on. Yeah.
Comment. I mean, currently we share our energy and environmental data with the Department of Environmental Conservation, and that is really where the effort to quantify the health benefits is occurring. We would continue to share information with them. So as that's developed, we would expect it to come out of an organization like the DEC or something we do jointly.
Hi, this is Nick Lombardi from Conservation Services Group. Just a quick question. You didn't mention a unit of measure for the energy and environmental metrics, so I was just wondering how you plan to report that, if it's one unit, if it's multiple different categories.
So it'll track fairly well along the lines of our current reporting. So for energy efficiency, we'll be reporting it in megawatt hours or MMBTUs of savings over a lifetime. We'll also, if it's from combined heat and power, our measurement will be in units of primary energy saved, but it'll be in BTUs. If it's a clean energy generation, we will report the capacity in megawatt hours. We'll estimate the megawatt hours produced. I mean, those would be the intended benefit. And in greenhouse gas emission reductions, we would be reporting in terms of tons of emissions reduced, and then we would ratio that with the state baseline for greenhouse gas emissions.
Great, thank you.
This is another question, Laura from National Grid. Another question regarding reporting. I'm wondering if the New York Green Bank will be requiring its supported partners to report customer-level detail on loan performance or project performance, and that level detail, or mainly just the program and portfolio level of the loan performance.
Thanks, Laura. That's a great question. As I said at the outset when we started talking about the metrics, what we've tried to take into account is balancing a bunch of different needs. Certainly needs of stakeholders, needs of accountability, needs of transparency, but also recognizing the fact that we operate in a marketplace, that our clients and partners are private sector participants, and that there's certain information that's just not going to be readily available for a number of different reasons, but one principal reason will be confidentiality, competitive data. And we, as the Green Bank, when we will impose, as lenders and investors do ordinarily in the private sector, certain information requirements, these will be in line with usual and customary commercial practice. And so that's the bounds that we intend to work within. And so all of our clients and partners should expect to deal with us as if they are dealing with a comparable private sector institution in that regard.
No further questions, Peggy.
Okay, thank you, New York. Okay, I will ask here in Albany if there's any additional questions. David?
First, I want to just Dave Heppenstall from the Association for Energy Affordability. And I first just wanted to thank you for the presentation. I think it was very, very helpful to give the more detailed background and your thought process right now and the status. One metric that is perhaps implicit here in financial terms is back at the opening technical session when you talked about the amount that was invested from the existing programs, then the goal of $1 billion. You know, something about how we're going to be tracking what that's, what that status is. I know some of us from the beginning concerned that although there's a wonderful project and a wonderful vision, the timing of exactly what money is available when to provide, the jump starting in this process and what effect it would have on existing program dollars. Okay, and so, and I know in that first session there was a question about what's going to happen, and so are you going to track the status toward that achievement of that $1 billion?
Is the question primarily around how it will impact other NYSERDA programs?
Well, from a metrics perspective, I guess just knowing where we stand and whether there will be a need to move to a direct impact on other programs. I guess that's...
Somebody else from NYSERDA or DPS might be better.
Colleen or Peggy, correct me if I'm wrong, but I believe the Clean Energy Fund proceeding is meant to address the funding and the nature of all the other programs that are going to be going on, NYSERDA programs as well as others. One of them, I believe, is the Green Bank. There's a proposal due from NYSERDA in the middle of August, I believe. Am I correct, Colleen? So I would expect that's the place to look for the future from all the opportunities that are going to be here in New York, including the Green Bank and the other programs. Couple months.
But it's still that implies there will be some way that there will be a metric tracking that whole process and its possible impact on other programs.
David,
or
is
basically
your
it's
question
no longer
asking
an issue.
about capitalization?
Yeah,
I guess
right.
Your question
Really
is
the
that,
capitalization.
right. So in hoping to just clarify what your question and input is. So the $1 billion Green Bank versus the current state of the Green Bank with
right.
the current capitalization, and Alfred, forgive me, 165 million, I believe was the from ratepayer funds. So is your question
right.
really the balance?
Right. Sorry,
I'm not sure that that's completely a metric, but I think your question is just kind of where do you
right.
stand in
where we
full
stand and how do we
capitalization.
know where we stand over time.
So I mean, it is going to show up a little bit in our actual specific metrics, in that when we talk about, capital C capital, that is going to be, at this moment in time, it's the 218.5. As that changes over time and we enter into a process that backs into what Peter Keene was talking about, and our number changes, that's going to show up in our metrics, because that's going to tell you the return on investment. Is it going to be a return on 218.5? Is it going to be a return on a larger number? And other of our metrics. That's where you're going to see it.
Yeah,
right.
Just to give the context for the question really is because there's so many different proceedings happening at this point in time, and actually the intersection of all of those is going to be something that many of us will want to be looking to see what effect the actual steps in sequencing will have on other things and other choices.
Right. Thank you for the question. So, and to just echo what Peter Keene's statement was, I think that you'll see that in the August proposal that will look at the time period 2016 through 2020 in the Clean Energy Fund and the things that will be proposed in there. Colleen, do you have additional comment?
I understand completely the confusion with the multiple proceedings, but the Clean Energy Fund proposal is about trying to lay out the overall approach of how the cap will be set for the overall collections amount, the amount of money that's going to be set aside or collected to support clean energy programs holistically. Then, and it'll create kind of buckets of how much is going to support the Green Bank in each year to finish the capitalization out there. So you should see a view of at least a proposal in August of how that's going to happen. So that'll be the proposal. There'll still be a need for the Green Bank, a second capitalization, the second tranche of funding to come in with a separate petition that will also still be in the green bank case in proceeding otherwise for the commission to actually make the decision on that money that'll go to the green bank. So if that helps.
Thank you for that clarification. Additional question here in Albany?
I have a follow-up. I think Ms. Gerwitz just answered my question, but I just want to make sure I understand the clarification correctly, if you'll be patient. So the question of, I guess, what the plan is for completing the capitalization of the Green Bank, getting up to that $1 billion level. If I understand the clarification correctly, it's a two-prong approach that some tranche of money, there'll be some revenue stream coming out of the Clean Energy Fund that will go towards the Green Bank capitalization. And on the other hand, there will be a proposal from the Green Bank later this year, if I heard correctly, for an additional bucket of money from some source, whether it's repurposed customer collections or incremental collections, that'll be a second source of additional capitalization for the bank. Is that correct?
I believe you got it, Kate. In general, I think the point that, yes, in general, it's correct. The point of the Clean Energy Fund was to be able to say, lay out an approach so everybody could see all the efforts, but it still takes a separate action to authorize the funding for each of those buckets. Okay, so in other words, let's take today's current setup. You got renewables programs, the Green Bank, the energy efficiency programs. Okay, they're each got their own proceeding that are ongoing. Okay, so the Green Bank and New York Sun is a part of that part. So there's already a proceeding that started to fund the New York Sun initiative, for instance. There's already proceedings started to fund the Green Bank. The idea of the Clean Energy Fund was to let stakeholders see the whole picture together, as well as the commissioners, in terms of a plan. Okay, in terms of this is the total amount, this is the plan, a plan for how to approach this, or a proposed plan for how to approach that. Then decisions will have to be made on to actually allocate each of those funds to those different buckets.
And just to make sure that the procedure there is clear, so it's not kind of suggesting in your question that you thought it was two separate amounts of money, and it's not going to be that. It's the
one.
Clean Energy Fund proceeding will essentially be a roadmap or a plan for how much money will be allocated to the Green Bank, and then probably coming later this year, I think is our current expectation, the Green Bank petition will be the actual mechanism for implementing that plan and for putting the money in the Green Bank.
I see. So in other words, the Clean Energy Fund will designate a certain amount of money for the Green Bank, and then the Green Bank later will come in with a petition for how it's going to take that allocation and basically what it will do with it, what is planned for its application.
Exactly.
Okay. That's helpful clarification. Thank you very much.
If I could take it another step, then track 2 in REV is also going to have some effect, I would think, in terms of what the rate-making process that's going to yield. Let's say REV means also DER, right? We've got distributed energy resources, and that is going to be changes in rate, as I understand it. It looks as if rate cases will then have proceedings or components of taking on new rate structure that will stimulate activity for energy efficiency, demand response, and DG. Right?
So that's certainly true, and I think we're kind of moving beyond now the Green Bank and the Green Bank metrics. So I mean that's certainly true, and that'll have an impact on the Clean Energy Fund, I think, overall, and it's something that will be somewhat addressed at least.
It might generate some effect on your whole planning process going forward as well.
Yeah, David, and just to add to Ted's point, and I think, and for everyone here, the Green Bank will be operating in real time in the markets and anything that is affecting those markets. And so as the REV proceeding, reforming energy visions, I got to be clear on the acronyms now, as that proceeding continues to unfold, and as many of you who are in the room, I'm sure, are intimately involved with that, things will be happening in real time. And of course, the Green Bank will be, observing that in the marketplace as well.
Be an important player in that process.
Another question here in Albany.
Yes, Radmila Milicic from the Independent Power Producers of New York. I have a couple follow-up questions. One to an earlier question about metrics from New York City. It sounds like what you intend in terms of reporting will be mostly in the aggregate, which will provide a sufficient level of transparency while also maintaining reasonableness. But I just was wondering if you could say a little bit more about how market information will be handled and how confidential business information will be protected, especially while negotiations are going on and reporting is being done, and as well as while investments are being made and are undergone.
Thank you for the question. I think the important thing to bear in mind here is that as Greenbank goes forward and we are reporting out to all of our stakeholders indications of how we're doing in the business, we are deliberately doing that on an aggregated basis for two reasons. One is that New York Greenbank type of business is not something where if you saw transaction by transaction or day by day, it's like watching your stock portfolio every day and, you know, you're up, you're down, you're up, you're down. And really what you need to look at is over a period of time, what is the performance looking like? So we're taking that tack for that business reason, but we're also taking that tack for what you alluded to, and that is something I mentioned earlier. We're dealing with members of the private sector here, and these are the people that for Greenbank to be successful, we need to build a profile with, we need to build our credibility with, and we need to engage with them fully. And if there's any reason that they feel that they're not able to engage with the Greenbank fully, then that will completely undercut our ability to be successful on our mandate for the benefit of all New Yorkers. And one of those things is that we need to be a non-burdensome counterparty, right? We can't be making demands that are way beyond what is usual in customary commercial practice, and that's going to relate to how long does it take us to respond, how do we treat commercial information, we're keeping confidential. If people are in discussions with us, it's like if you were in discussions with any other private counterparty. That's not public information. Details of transactions is not going to be reported on a transaction-by-transaction basis. If in any particular case a transaction is closed and the parties agree to make a press release, then that type of information obviously is made public, again, consistent with usual and customary commercial practice. So Rad, the points you're raising are of critical importance to the Greenbank. And in our mandate and mission to, even though we are a state-sponsored investment fund, to look and feel with all our counterparties like a private sector organization, we're very cognizant of exactly the issues you raise.
Well, thank you for that. It sounds like you are really intending to foster investment certainty. The other question I have is some of the discussion here in Albany in terms of the relationship of the Greenbank to other programs, especially the RPS main tier and the upcoming Clean Energy Fund. We've heard some good information about that here, but I think one of the main questions that we have is how will the RPS main tier move forward in relation to the Greenbank and the Clean Energy Fund, and how will we ensure sufficient funding for programs such as that without having a commingling of funds and additional diversion of funds? So that may be more of a programmatic question, but I think it's essential as to the operation of the Greenbank and the role of the Greenbank and the confidence in the Greenbank.
Right. Yeah, I appreciate the question and also the interest of the parties as we have a number of multiple proceedings happening kind of in real time. For the purposes of today's meeting and for the speakers we have today, I think that's a little outside the bounds of the metrics discussion. However, it's a good point in case, and with the Clean Energy Fund proposal that will be coming in, that will be looking at RPS in its entirety along with the main tier. So I would encourage you to continue to be involved with the additional discussions on that side. I think that's a little bit outside of the particular metrics discussion here.
Thank you.
Peggy, we have a few follow-up questions here.
Okay, we'll take a question from New York, and then we have another one coming here in Albany. So New York, go ahead.
Hi, this is Laura again from National Grid. This is a follow-up to the conversation that was going on about the complete capitalization of New York Greenbank as part of the Clean Energy Fund proceedings. I understand that process. So that makes it seem like this would be coming from additional surcharges in the 2016-2020 period. Am I understanding the source of the final capitalization correctly, or is there a different plan for borrowing of those funds or finding of those funds?
I think that's again something that's really going to be in the Clean Energy Fund proposal. To what extent those will come from surcharges or from other sources, I think that's something that we're not ready to talk about or able to talk about in detail today.
The Clean Energy Fund order does discuss, expected funding levels and sources. It has suggestions in it. The plan will be much more specific about that.
Okay, fair enough. Thank you. And then the second follow-up question I had was in relation to the conversation about the evolving nature of New York Green Bank with REV, and I think that makes a lot of sense. And I was just wondering, given this rolling and open structure of the RFP for New York Green Bank, if there is any type of cost-benefit test aside from return on investment to decide which projects moving forward would be more beneficial or less beneficial, if there's any way to determine who gets granted this relationship as it moves forward with its evolving structure.
Thank you for the question, Laura. And given it is an evergreen RFP and not a deadline, we will be evaluating transactions on a case-by-case basis. And in those transactions that come in and meet our objectives squarely, we will be looking to proceed with. If there are a batch in at one time that all meet the objectives, we'll be working as best we can to proceed on a timely basis with all of those, but we will be in some cases required to prioritize, and for those we will be looking at those that most squarely meet from the standpoint of credit, that first consideration, revenues greater than expenses on a portfolio basis, that best meets market transformation, and that best meets impact on New York State greenhouse gases. And I think that plays into the, we are, as we said, very encouraged by the private market interaction to date, and I think that plays into the importance of this plan that's been discussed as relates to the remainder of our capitalization. So thank you for the question.
Okay, we're going to take one question here in Albany, and then we'll turn it back over to New York. Go ahead, sir.
Good morning. Rick Morse from Ecology and Environment. We're an environmental and energy consulting firm headquartered in Western New York. We work on energy projects, including renewable wind and solar, both here in New York as well as across the country, as well as internationally. Most of our work is at the siting phase, doing environmental impact analysis in permitting. However, oftentimes we're brought in by project sponsors at early stage development. And just an observation, when we were brought in at that stage, we're brought in to do feasibility studies, permit road mapping, and due diligence. And uniformly, we're asked to sign non-disclosure statements, mainly for the reasons of competition. Often you have multiple projects looking at the same market. So uniformly, we have to do non-disclosure. And in one case here in New York, we were working for multiple projects that were competing, and we had to not only sign non-disclosure, we had to provide legal assurance that we had built walls within the company, not to share information. So I just, an observation, support what I'm hearing here this morning. Thank you.
Thank you for the comment.
Okay, go ahead, New York.
Good morning. This is George Brady from Con Edison. Earlier in the presentation, there was a discussion of will and won't, what the Green Bank will and won't do. One of the points was about developing and incubating new structures. I was hoping you could elaborate a little bit on what that means.
Thank you for the question. Probably the best way to elaborate is to give a few examples. And again, we're not thinking in terms of by incubating new structures, meaning supporting unproven technologies, etc., but being willing to work with the private sector to develop new financing structures. And one example might be that if you think about the various markets out there that are potentially underserved, and again, this comment's not to be prescriptive that this is what we're focusing on, but an area that we have seen and expect the private market to tell us is being underserved is whether it's energy efficiency or distributed generation for the middle market. Where financing is generally available for very large utility scale projects if they're well structured, and financing in certain cases, there may be some tenor issues, but in certain cases is available for investment grade counterparties, whether it's a MUSH counterparty or a corporate counterparty. But it's really tough to find financing for the middle market, commercial entities that are unrated, that may want to deploy solar on the rooftop. They may have a great premises for that, or do energy efficiency projects. That sector has difficulty getting financing. So, we look at that and we say, well, what are the issues there? If we're talking about solar, I think there's a lot of expertise in the private financial sector around solar project risk. So that's something that's understood in the marketplace. And then you say, well, it's not the project risk, it must be the counterparty risk. The fact that you have a PPA counterparty that's not rated, that's a middle market credit. And does the private sector take middle market credit risk? The answer is yes. I mean, not for every conceivable counterparty, but certainly financial institutions lend to the middle market. So why is there not more availability? Why are there not programs in place and financing programs in place for middle market solar projects? And, I think one answer there is that, typically the institutions that have the expertise and the teams that have expertise in project finance at the large institutions don't have expertise in middle market credit. They were raised on doing utility scale projects, and they've approached that marketplace as they've evolved into distributed generation with sort of the same mentality, where they play within what they know, which is we understand project risk and we expect an investment grade counterparty. And then the middle market lenders, they were not raised in a world where, from an analysis standpoint, where they had to be concerned about project risk. They just simply have a financial obligation. So the issue is that you don't have an overlap in that knowledge. So that would be an example of where, there could be a role for the green bank to play if participants in that market are interested in serving that market, if developers think there's a real opportunity there, and they can bring to bear financial institutions that are willing to do a little bit of the legwork, but perhaps with green bank support, whether it's credit enhancement or aggregation facilities to create volume and scale around that, can create a new structure, help incubate a new structure, provide a prototype of how to approach that sector, and overlay the two elements of middle market credit underwriting and solar project underwriting criteria. That would be an example of incubating and helping develop a new structure, where we think that once there is greater scale and a roadmap, and there's demonstrated that there actually is business out there and developers can deliver volumes that meet the underwriting criteria, we would think that the private sector would, after some period of time, start embracing that sector. And there are numerous examples like that. That's just one, but that's an example. So hope that helps.
Hi,
Thank
Doug
you.
Sims again.
Sorry. Go ahead, New York.
So, Alfred, that's a very helpful example. That brings me back to the level of awareness metric, and there's a lot of theories of change that are embedded in the green bank approach, and I think a lot of people are wanting to see, how they pan out, how you guys learn over time. So my question is the level of awareness metric how you expect to sort of report out sort of, here's the theory of change we had about middle markets solar credit. Here's how we tested it out, and then here's the result. And if that is that the kind of thing you're going to be reporting out, and market transformation level of awareness, or is it some other kind of metric that you're discussing? And if so, if not, how are you going to get that information out there? That'll be very useful to other market participants.
So I think you've accurately described it. In addition,
Patrick, is your microphone on?
Yeah.
Okay.
Light was on. So I think you've accurately described what we would do, and we would combine that with actual market activity as well to see that it's not just a perception change, but it's an activity change.
Thank you.
Okay. Another question from here in Albany. Help yourself.
Thank you. This is probably more in the nature of feedback with a question on metrics. Just your example, Mr. Griffin, of how the Green Bank could play a role in helping that middle market, close gap in the middle market, was interesting. I know the city has advocated, or at least expressed its hope that the Green Bank also bridges the gap on financing opportunities for low-income and multifamily buildings and addresses some of the challenges, for those projects. So without leading into an operational question of to what extent that will be a focus, I will go back to the metric question, which I think was asked earlier, and to what extent the reporting will be done on, say, a customer class basis, so that the interested parties can see the amount of activity that the Green Bank has had, whether it's on the low-income customer class or by multifamily building or something along those lines.
I'll start with the answer, and my colleagues can fill in the gaps. Thank you for the question. I would expect on an aggregated basis that if it involves multi-family housing, that's information that would be reported. If it involves consumers, that's information that would be reported. And then from the standpoint, as Caroline pointed out, I think as we can agree with our commercial counterparties on what an appropriate press release would be, that I wouldn't be surprised if part of that release would be that this is a facility that will be supporting this initiative around multifamily, or if it happens to be an initiative that we're responding to that involves lower moderate income, that would probably reference that, what the business proposition is.
Okay. So since I was tacitly invited to tack on, I will. One of the metrics that we will be reporting quarterly is the overall portfolio, in terms of what's in it, what's deployed, but also concentrations. And concentrations, we'd footnoted in there, and it's going to be, as Alfred said, on an aggregated basis. What type of financial products are we writing more or less of? What types of ultimate projects are our clients and partners, putting our investment to work in? So it will be, that type of information will not just be amassed together across all projects, but as we report on our portfolio on an aggregated quarterly basis, there will be some insights into type in that way.
Okay. Thank you.
Question from New York again.
Go ahead.
So there was an earlier question about transaction activity, being that the Green Bank has been open for business since February, it sounds like. And I believe the response was regarding the fact that there have been RFPs, or that there have been submitted proposals, no completed transactions yet. Can you potentially speak on why that is? And what I'm trying to get to is, do you have an idea of an expected timeline for when a project could expect financing from beginning to end?
Thank you for the question. We just issued the RFP in February, so that was our first formal outreach to the marketplace. As you might expect, we generally would not immediately receive RFPs. There's a lag time and a market understanding development and so forth of understanding what that's all about prior to receiving RFPs. We are receiving RFPs now. Certain of those RFPs will, are RFPs that we've been able to say that that we'd like to proceed, subject to better understanding X, Y, and Z aspects in some of those RFPs. We've had to say that we don't have enough information here to proceed. This is what your response is lacking, and certain proposals just don't seem to be a fit for our mandate, and we've communicated that. We are making, Nick Wickham, who's sitting to your right there, he's leading our effort on the investment side, and we've, with Nick's leadership, have been making a real effort to have a fairly quick turnaround once somebody submits a proposal as to what the issues are, if any, and what the next steps are. And I think we've been getting that done generally within 2 to 3 weeks. Reviewing the transaction, agreeing as a team what the next steps are, what the response should be, and responding. As far as closing a transaction, I think it'll partly depend on how complex and how fully baked a transaction is, and how ready the counterparty is to proceed. And if whether you're at the New York Green Bank or a private institution, the question often comes up as how quickly can you close a transaction, turn it around from start to finish. And I think whether at the New York Green Bank or at a private institution, the answer is the same. I think it's possible to put an 8 to 12 week calendar around a transaction if sort of everything's well in place and fully thought out, and everybody's proceeding towards a close. Thinking around 12 weeks, if that's the case, is probably most appropriate. These transactions are, all structured transactions, so there's, some complexity with any project financing. And if a transaction has not been fully thought out and sort of the pieces in place, it would take longer than that. And it's, just not our team that plays a role in that. It's the counterparties, and, there may be a number of counterparties involved, and how quickly they can move and turn things around as well.
Thank you.
Okay, do we have any final questions from New York? Okay, we're all set. And here in Albany, any additional input? Okay, well, thank you all for your interest and attendance. We'll look forward to the team taking back the questions and the discussion we had here today, and look forward to NYSERDA and the Green Bank making their filing on June 19th. Thank you all.